Hello, everybody, and welcome. As we like to do every week, we like to take a look at the past week's market activity and then, of course, bounce around the market and look for something to trade. Well, again, as I always say, if you've been watching the market, it's been basically on an upward rocket ship ride for the last few weeks, and you can see because of that, volatility in the market is declining. We obviously are volatility-based traders. We like volatility, but in this case, no harm in the market's going up. We just have to look for other places to trade. So if we look at the NASDAQ, this is the S&P 500. If we look at the NASDAQ, obviously a very similar story. Volatility way down here. And the IWM is always the one that looks slightly different than the other ones, but also pretty much near its all-time highs, but also volatility is super low. So what are we going to look to trade this week? Well, we're going to go over to natural gas, which in this case we use the UNG, basically kind of ETF or whatever, ETN, I'm not sure what it is to be honest with you, but it's a natural gas stock and it follows natural gas, and you can see this is pretty much near its lows for the year. Took a huge dive at the beginning of the year, and volatility is pretty much near its highs over the last few months. You can see if we look right here, except for a blip right there, in the last 4 or 5 months, this is about as high as it's been. So the market volatility is pretty low. UNG is near its lows, volatility is pretty high. Seems like a good contrarian play to bet on the upside, hoping that over the next 40-ish days it goes up. So if we go to the trade page, we're going to go right here to 40 days, right there. And what we do is we can open this one up, and we're selling a put vertical because we believe the stock is going to kind of hopefully bounce up over the next 40-ish days. We always start by selling the put right below the stock price. So 13 is just below where the stock is here. And we're going to look to sell a put vertical. So if I go here, I sell a vertical, you can see this is too much money. 47 cents, I don't want to sell something for 47 cents. Essentially, I'm looking for 33 to 40 cents per dollar width of strikes. So how can I still make the trade if I want to and have it fit my rules? Well, if I make this $2 wide, if I go to 13 and 11, there we go. Remember, I'm looking for 33 to 40 cents per dollar. This is $2. So if I multiply 33 and 40 times 2, it's 66 to 80. So I'm looking for this to be 66 to 80 cents credit. And you can see it is. So in this case, what I'm going to do is I'm going to sell it $2 wide, put vertical in UNG with the assumption that over the next 40-ish days it bounces from here. And that is our trade in UNG, natural gas, for tomorrow.